Hello guys, I'm back. Let's take a look at the mental aspect of trading and patterns and how they relate to each other. We have to understand that the markets, they just simply don't move cleanly. Okay, when you're in lower time frames, the patterns will simply not form as you want or expect them to. Market is going to move in whatever way it wants to, and you have to be careful when you're trading, especially when trading patterns. Okay, you can't attach yourself to a pattern and therefore an outcome, because if you do so, you will bias yourself and completely destroy your account. Because by attaching yourself to one pattern, one outcome, you limit your expectations of the trade, you limit your mind, and therefore you become unable to adapt and adjust the trade when needed. Okay, take a look at this market here. Look at how messy it actually is. Look at this. Looks very untradeable, right? But it is very tradable if you stay in your lane and only trade your playbook. It's very easy to look at the market as I'm doing now though and draw some lines and say, here, look at these patterns. But actually trading this in real time is a different story. Because right now I can just draw in some lines and yeah, look at this. Contracting flat here, and here we have another flat. Over here there's also a bigger running flat, etc, etc. This is why, and here comes my next point, always understand the context and the higher time frame story. The market is based on the concept of demand and supply, and the price data, what you see here, all of this, this is a reflection of that. The price is telling us all a story. If we're willing to listen to it objectively, then we can create specific methodologies and systems to take advantage of it. Take a look. Look at the 4 hour. Then it suddenly looks cleaner. Now there's a story, right? Let's just do this, replay, go back. And the story is, when you're trading patterns, then you're trading based on a simple model of how the market moves. It moves in impulses, corrections, and impulses, right? And right here, look, impulse, a correction, which again is a pattern, and this pattern that is forming is something that we know, right? Broke the top, it's not breaking the low right now, so a possible running flat in play. And what is giving strength to being a buyer down here is that I've also put in an anchor bias right here from the beginning of this impulse to see where the buyers are located on average, right? And we can see that we came down, bounced off, and now we down here again. So now we have a story, or we are watching the story develop. But you do not just buy, right? Because you have this information. Now we would zoom in, take a look at what's actually going on in here on lower time frames. Let's stay on the 1 hour actually. Look at this. We don't actually know when the market, or if the market is even going to make a move up. Like, is this even going to happen? Who knows, right? We cannot forecast the market. We don't know what the future holds, but we can identify what is going on and trade based off that. So let me just delete this as well, like that. Okay, so look at this. It's your job as a trader to take every trade when it presents itself, and if it's in your playbook, of course. So when this was coming down, when is this market actually going up? I can tell you that right here I was a buyer. I was buying here because this look like it's ready, like we're going up, right? Right here I was also a buyer because this could also have been going up. From this point I do not know whether it was going to or not, because just take a look at this. Doesn't this look like a beautiful running flat? And we're gonna go up. Just take a look at it for a second, right? Because this is important, and this is exactly my point and what I'm trying to convey in this video. Do not attach yourself to a pattern, to an outcome, because if you do, then all you see is this pattern here. Yeah? And then when it doesn't work, you start acting out emotionally and make stupid decisions. And then you simply can't trade with a clear mind, because all you can think of is, it should have gone up. Look at this pattern. So when you're looking at this and your expectation is that the market is going up, this is the trade, right? You're looking for this. So if you're buying here, your stop should be right around this area. But know this, your mind has to be adaptable and adjustable, because say the trade comes down, you don't panic. Comes down, you don't panic. Look at this. No reason to panic. You're out of the trade and then you wait. You're patient. The story is still unchanged. It's still the same. Can still go up. So you wait. And you take the buys when they present themselves. And you protect yourself. You protect your capital so that you don't take big and stupid losses. So you need strategies in place that keeps your trading in place. Look. Let's take a look at it. Then it came down. You don't panic. You're patient. Another buy. This one here. But also didn't work out. And take a note of the structure. Look at how slowly it's moving down. There's a lot of signals and keys and clues that you can extract from the market if you understand what's going on. But then finally, let's say if you were trading this and you took one loss here, another loss here, and then it finally worked out. Pattern is moving, pattern is developing, and you will make all your money back and more. This is why patience is important. Okay guys, I think this is a good time to end the video. I hope that you got a lot of value from it. So let's end it here guys. Thanks for watching.